According to Fortune, Valarian has just raised $50 million in Series A funding to help governments and large enterprises regain control over their data and AI infrastructure, and this story has some very interesting implications for Palantir investors. Welcome back to the show, and today we are going to unpack what this means for the broader defense tech and data infrastructure space, and how it might shape the competitive landscape around Palantir. According to Fortune News, Valarian is a London-based startup led by co-founders Max Buchan and Josh McLaughlin. The key point for investors is McLaughlin's background. He previously served as a managing director at Palantir. That means you have senior Palantir DNA effectively spinning out to build a company that is, in many ways, attacking one of the most sensitive areas Palantir plays in: secure data environments for governments and critical enterprises. Fortune mentions that Valarian's core product is a software layer called ACRA. Think of ACRA as a sealed operating room for AI and sensitive applications. Instead of replacing cloud providers like Amazon Web Services, Microsoft Azure, or Google Cloud, ACRA sits between those clouds and the customer's AI workloads. It tightly controls what data can leave, who can access it, and who can shut systems off. From an investor's standpoint, that description should ring a bell. Palantir's whole value proposition revolves around enabling governments and enterprises to integrate, secure, and analyze their most sensitive data, especially in defense, intelligence, critical infrastructure, and regulated industries. Now we have a former Palantir managing director focusing very specifically on a hot and politically charged subsegment of that mission: legal and operational sovereignty in the age of AI. To understand the investment implications, it helps to break down the forces driving Valarian's funding round. First, there is the geopolitical backdrop. European defense spending is surging. According to Fortune, European defense budgets hit roughly $447 billion last year. That spending is not only going to tanks and missiles, a growing share is going to software, secure cloud, AI infrastructure, and digital command systems. Palantir has been a notable beneficiary of this trend, with contracts across the United Kingdom, other European governments, and NATO partners. Now, the article points to a very specific political friction. An incoming UK Prime Minister is moving to cancel a state contract with Palantir. That is not just about one vendor being swapped out. It is part of a broader European push to reduce dependence on large American data and analytics companies, especially in healthcare and defense. European regulators and politicians have been talking about digital sovereignty for years. What is changing now is that there are well-funded startups like Valarian designed specifically to address that concern. For Palantir shareholders, this matters in several ways. First, the risk side. Anytime you see major European governments discussing rolling back or canceling key Palantir contracts, that introduces headline risk and revenue uncertainty. Palantir has positioned itself as a strategic partner for sovereign data environments, yet some European policymakers see Palantir itself as a dependency risk, because it is a US company subject to US law. That brings us to the second major force highlighted in the Fortune piece, the US Cloud Act. The Cloud Act allows U.S. authorities, under certain conditions, to compel U.S. companies to provide data they hold, even if that data is stored outside the United States. This is exactly the type of legal framework that makes European governments nervous. If their most sensitive military, intelligence, or healthcare data runs on infrastructure controlled by U.S. firms, they worry Washington could theoretically access it or unilaterally influence its availability. Valarian's founder, Max Buchan, argues that true sovereignty cannot just be a settings toggle buried inside a foreign provider's infrastructure. In his words, sovereignty has to be the infrastructure itself. So instead of telling governments, we, an American or British vendor, will give you special options, he is saying, we will give you a layer that you control, which cages in the big clouds, and enforces your own rules at the infrastructure level. For investors in Palantir, this raises a strategic question. Palantir has often pitched its software as a way for customers to maintain control over their own data and workflows, even when using third-party infrastructure. However, perceptions matter as much as technical reality. If European politicians decide that any US headquartered vendor is inherently a sovereignty risk, companies like Valarian, which are geographically and legally closer to European regulations, could become more politically acceptable partners. The article also mentions another key data point that investors should pay attention to: the Trump administration's decision to cut off Anthropic's access abroad. When that happened, users outside the United States suddenly could not use Anthropic's model because the US president made a decision. For people thinking about national security and continuity of operations, that incident was a wake-up call. It illustrated that access to critical AI systems could be switched off for geopolitical reasons. From a Palantir investor's lens, this is a double-edged sword. On the one hand, it underscores the importance of vendors who are willing and able to design for sovereignty and resilience. Palantir often emphasizes that its platforms can be deployed on-premise, in sovereign clouds, or in hybrid configurations, and that its software is built for high-security, mission-critical use cases. On the other hand, European policymakers may increasingly look for alternative vendors who are less exposed to U.S. political decisions, or who are explicitly designed to neutralize that exposure. Another important detail is the investor backing Valarian. According to Fortune, New Enterprise Associates, or NEA, led this $50 million series round. NEA is one of the largest and most established venture firms globally. The article states that this is NEA's first European investment in defense and dual-use technology. That is a strong signal that sophisticated capital believes there is a large market for sovereignty-focused, AI infrastructure security in Europe. For Palantir shareholders, NEA's participation suggests that the competitive set in defense-adjacent software is expanding, and that specialized sovereign AI layers may emerge as an important category. The risk is that some deals that might have flowed naturally to Palantir over time could instead be contested by companies like Valarian, who pitch themselves as the neutral or locally anchored control layer. However, there is also a potential positive angle. The rise of companies like Valarian validates several core theses that underpin Palantir's own long-term story. First, it confirms that governments and large enterprises are moving from general cloud adoption to a second phase, securing AI workloads, enforcing fine-grained access rules, and dealing with cross-border legal constraints. That is basically the whole narrative around why software like Palantir Foundry and Palantir Gotham matter. They are not just about analytics, they are about governance, auditability, access control, and mission assurance. Second, it underscores that this is a software-heavy, not hardware-heavy, expansion. NEA's Mustafa Nemakwala highlights that Valarian can scale without the capital intensity of traditional defense manufacturing. There are no production lines, no missile tests, no giant factories. That is very similar to Palantir, where the model is highly leveraged software with relatively low capital expenditure requirements. If the addressable market for this category grows, Palantir does not need to change its business model to benefit from that overall sector growth. Third, this momentum in European sovereign AI infrastructure could, paradoxically, give Palantir more room to push its own sovereign product offerings. Palantir has been talking about trust, data ownership, and sovereign deployment models for years. If more European leaders are now actively looking for concrete architectures to achieve sovereignty, Palantir has an opportunity to better articulate how its platforms can be deployed under local control, integrated with European clouds, or even used alongside companies like Valarian. That raises a strategic possibility that investors should keep in mind, complementarity rather than pure competition. Valarian positions ACRA as a control layer around cloud infrastructure and AI models. Palantir positions its products as data integration, modeling, and operational decision platforms. Those sit one level above raw infrastructure. In a future European government architecture, you could imagine a stack where, at the bottom, you have commodity cloud providers like AWS, Azure, or European sovereign clouds. On top of that, a control layer like Valarian's ACRA enforces data residency, access rules, and shut-off authority on behalf of the local government. Above that, platforms like Palantir Gotham or Foundry integrate the government's data, run complex analytics, and support decision-making and operations. In that model, Valarian does not necessarily eliminate Palantir. Instead, it wraps and constrains the underlying cloud pieces, while Palantir continues to solve for data fusion, mission workflows, AI-assisted operations, and analytics. The political optics are that the government holds the keys to the infrastructure and can yank access if needed, while still leveraging best-in-class analytic platforms. Of course, there is another, more adversarial scenario. Governments under political pressure could decide that having a US analytics platform like Palantir at the top of the stack is still too risky. They may encourage or fund domestic or European alternatives in analytics and AI operations as well. In that scenario, Valarian is part of a broader ecosystem replacing Palantir's footprint over time. Which scenario plays out depends on several factors. One factor is how aggressively European policymakers push for legal and political independence from US tech infrastructure. If new regulations or procurement rules explicitly favor European headquartered or locally controlled software vendors for sensitive workloads, Palantir may face more structural headwinds. Another factor is how Palantir responds. If Palantir can demonstrate technically and contractually that European governments truly own and control their deployments, perhaps even via special legal structures or joint ventures, then Palantir might reframe itself less as an American dependency and more as a neutral technological partner. A third factor is execution. Valarian is still an early-stage company, even with $70 million in total funding. Palantir, in contrast, is already deeply embedded with many governments, with proven deployments across defense, intelligence, law enforcement, healthcare, and critical infrastructure. There is a big difference between a strongly worded sovereignty pitch deck and actually running mission-critical systems in wartime or crisis conditions. Investors should also note that the news connects to a larger macro theme, the weaponization of interdependence in technology. The Russia-Ukraine war, US-China tensions, and global export controls on chips and AI models have all shown that technology dependencies can quickly become geopolitical levers. Buchan points out that, before Russia's full-scale invasion of Ukraine, most enterprises simply treated multi-region cloud setups as a technical architecture, not a vulnerability. After the invasion and subsequent sanctions, the notion that infrastructure could be turned off or denied due to political decisions has moved from theory to practice. The Trump administration's move to restrict Anthropic abroad reinforced that idea for AI. Palantir's own pitch often leans into this environment. The company likes to describe itself as the software for the West, supporting allied democracies in an era of rising authoritarianism and conflict. But that narrative can cut both ways. If Europe fears that being part of the West still means being exposed to unilateral US decisions over core technologies, then the drive for intra-Western sovereignty becomes stronger. Europe might want to be aligned with the US strategically, while still being technologically autonomous at the infrastructure and data control level. So, what can Palantir investors practically take away from this Valarian story? First, it reinforces that the defense tech and secure AI opportunity in Europe is real and growing. A $50 million Series A, LED by a top-tier firm like NEA, into a niche but critical piece of the stack, is evidence that serious money believes this market will be large. That is supportive of the broader thesis that Palantir's government segment still has substantial runway, especially if the company continues to innovate on AI-driven operations and secure data management. Second, it highlights a specific political legal risk axis, data sovereignty and the Cloud Act. Investors should closely watch how often Palantir comes up in European debates about US cloud dependency, and whether contracts are reframed, localized, or shifted towards mixed vendor architectures. Signs of increasing insistence on sovereign control layers, like Valarian's, may indicate that Palantir will need to partner more, or accept a somewhat narrower role in the stack in some jurisdictions. Third, it brings attention to talent and ecosystem dynamics. A former Palantir managing director co-founding Valarian shows that Palantir alumni are seeding new companies in adjacent spaces. That is a mixed signal. On one side, it validates Palantir as a training ground for high-impact leaders. On the other, alumni can become credible competitors or alternatives when they raise large rounds and target the same government buyers. Fourth, it underscores the notion that in software-centric defense and security tech, the bottleneck is product-market fit and distribution, not physical production capacity. NEA's comment that Valarian will not fail because it overspent on a factory is equally true for Palantir. The key for Palantir is winning hearts, minds, and budgets in allied governments, not managing hardware supply chains. That means perception, trust, and political alignment become central competitive factors alongside technical capability. Finally, this story suggests a scenario where the overall pie grows even if Palantir's share in certain markets faces pressure. If every European defense ministry, intelligence agency, and critical infrastructure operator is suddenly forced to think seriously about AI sovereignty, data control, and shut-off risk, their budgets for software like Palantir's could expand. The question is how Palantir positions itself within that new budget line, as the primary platform, as one of several components, or as a specialized provider in certain niches. From a portfolio perspective, these developments argue for a nuanced view of Palantir. This news does not imply an immediate fundamental deterioration, it instead points to a more competitive, politically charged environment around exactly the problem Palantir is built to solve. If Palantir can stay ahead technically and adapt politically, the structural demand backdrop may still be favorable. If it cannot, nimble, sovereignty-first competitors like Valarian could gradually chip away at future contract potential, especially in Europe. In summary, according to Fortune, the rise of Valarian is a strong signal that AI infrastructure sovereignty is moving from think tank white papers into funded, operational reality. For Palantir investors, this confirms the importance of the market while sharpening the need to monitor geopolitical risk, legal frameworks like the Cloud Act, European procurement politics, and the evolving ecosystem of ex-Palantir founders in the defense tech space. That wraps up today's episode. If you found this discussion helpful, please follow or subscribe to the podcast so you do not miss future deep dives into the companies and themes shaping the defense tech and AI investing landscape. Thanks for listening.